There is a common assumption that an AI agent in accounts payable is an ingestion engine, a system designed to swallow unstructured invoices and to instantly output a digitized spreadsheet. For a finance department, this model represents a significant risk. It bypasses internal controls and ignores the principle of separation of duties. Processing financial data without a human gate introduces unverified entries directly into the ledger. When data is posted immediately and without verification, the audit trail is compromised. If an unauthorized or incorrect invoice is ingested and mapped, tracing the origin of that error becomes difficult, as there is no record of human authorization. Effective enterprise automation follows a different blueprint. It functions as a controlled state machine, operating on two distinct tracks: a data layer for processing and a communication layer for routing and authorization. While the AI handles the intake and mapping in the top lane, its progress is gated by the communication protocols in the bottom lane. The system is designed so that data cannot advance until a human provides clearance. By examining the architecture of an enterprise-grade AP agent, we can see the logic behind this sequence and why human approval must chronologically precede OCR data extraction. Following this specific architectural sequence allows a finance team to increase their volume of processed invoices while maintaining the integrity of their internal controls. The workflow begins with passive monitoring of the shared accounts payable inbox. The agent identifies incoming emails and flags any attached or embedded invoices for initial metadata capture. The system does not read the invoice line items at this stage. It records only the metadata, the sender's address, the timestamp, and the file name of the attachment. This metadata is passed to a vendor identification node. The agent cross-references the sender's details against a central database to verify the identity of the vendor. This is the vendor mapping table. It is a controlled master database, structurally separate from the transactional flow of daily invoices. This table dictates the routing for every document. When a vendor is identified, the database provides the default general ledger account, the cost center, and the specific individual required to approve the expense. If the sender is not recognized by this master table, the workflow triggers an exception protocol. This prevents unrecognized or potentially fraudulent documents from entering the main processing pipeline. Structurally separating master data from the intake process ensures that only verified vendors can progress through the automated system. At this point, the architecture introduces a critical divergence. This is the mechanism that ensures the agent remains under human supervision. In Step 4, the system routes the raw, unread invoice directly to the approver defined in the master table. The automated flow reaches a mandatory barrier. The process pauses at these coordinates. The system is designed to wait for a specific human action before any further processing occurs. The approver receives an email containing the attachment and a summary. They have the option to approve the expense, reject it, or request further clarification from the team. Once the response is captured, the agent logs the timestamp, the identity of the approver, and any comments. This record is locked into the system log, and the workflow is allowed to proceed. It is important to note that up to this point, no AI data extraction has taken place. The system has not yet read the numbers on the page. Gating the OCR engine behind human intent creates a verifiable audit trail. It ensures that a human has authorized the expense before the system begins digitizing the financial data. Now that the approval gate is clear, the OCR engine activates. The AI begins scanning the document to translate unstructured text into structured data. This sequence conserves processing power. The system only utilizes high-compute AI resources for invoices that have already been vetted and approved for payment. The engine identifies and extracts the core quantitative data, the invoice number, date, subtotal, tax, and the final total amount. This is the data enrichment phase. The quantitative output from the OCR merges with the routing rules from the master table to populate the invoice history table. This table serves as the transactional ledger for the entire system, providing a real-time record of all processed documents. Each entry contains the invoice amounts, the assigned general ledger account, and the recorded approval from the communication layer. Because this data is structured, the agent can actively utilize it for duplicate detection, checking new entries against historical records to prevent overpayment. This provides the structured data necessary for spend analysis and cash flow forecasting, allowing the finance team to review their obligations with higher precision. By merging human authorization with AI extraction, the system produces a transaction record that is both procedurally authorized and mathematically accurate. Real-world accounting requires the system to handle imperfections. Invoices with illegibility or missing data must be addressed without breaking the workflow. When the agent encounters a low-confidence scan or a missing vendor mapping, the invoice is routed into an exception handling loop, while clean data moves forward. These exceptions trigger a communication loop, sending a report to the accounting team so they can resolve the specific issue manually. Once the team corrects the data, these entries reconverge with the main workflow for a final review. In this final stage, a reviewer, such as a controller, receives the entire processed batch, including the resolved exceptions and the proposed posting output. The agent then generates the posting output, formatting the batch into the specific structure required for an ERP upload or journal entry. The final file is only produced once the secondary reviewer provides documented confirmation, ensuring one final check on the data. This dual-layered review process digitizes traditional separation of duties at scale, maintaining oversight from intake through to the final posting. Viewed as a whole, the architecture relies on interaction between the data and communication layers. The system links physical files directly to their corresponding database entries. Simultaneously, the communication layer stores every email and approval stamp associated with those entries. This architecture addresses a primary requirement for financial compliance: audit readiness. An auditor can select any journal entry and trace it back through the exception logs and master data, arriving at the specific email approval that authorized the transaction. AI does not replace the accountant's judgment. Instead, it provides a framework that enforces their existing controls and ensures every transaction is documented. By separating master data from daily transactions and gating processing behind human approval, institutional risk is reduced. This architectural model is the blueprint for achieving high-volume AP automation without compromising the security or integrity of financial operations.